A very good morning to my friends in Africa. To those in the Middle East, good afternoon. At Crowe Global, we believe that sharing knowledge across the network benefits everyone. Through experience, it has been proven that doing so helps clients make smart decisions that bring lasting value. I'm grateful to our colleagues, Wolfgang Kirschning and Jesus Romero. At the request of Zaid Maniar, they continue to support and promote regional cross-border initiatives. In a global economy where multinational enterprises play a prominent role, Crowe Global helps governments and multinational enterprises ensure taxable profits are reported in the right jurisdiction. We also ensure that tax base reported by these enterprises reflects the economic activity undertaken therein. Hence, we assist taxpayers mitigate the risks of economic double taxation in line with OECD and local regulations. And with that, I'd like to overview today's agenda. Rushab, if you could kindly move the slides. So after the opening remarks, there will be an update on BEPS and transfer pricing. There will be an update regarding transfer pricing capabilities in Africa and the Middle East. We're also excited about a case study that our colleagues will share with you today. And then, of course, we will discuss the impact of COVID-19 on transfer pricing and what are the next steps in terms of support. If we could move to the next slide, please. So at Crowe, we are ready. We've been building our capabilities and investing in our resources to bring transfer pricing capabilities to the market. So we are definitely ready. And now I will hand over the virtual stage to my colleagues, Erastus and Rushab. They will share a useful case study and explain COVID's impact. Together, we can chart a successful post-pandemic recovery. Thank you very much and good luck in today's webinar.
Yes, thank you, Kamil, for giving a brief opening remarks on Africa and Middle East, and at the same time giving the importance of the tax and the transfer pricing as a whole. So thank you for doing that as always, and always a pleasure to have you on the conference. So with this, I continue with my particular topic of transfer pricing here. So while we are going to discuss this topic in much more detailed manner alongside the case studies and having the impact of COVID-19 as well on transfer pricing side, let me just give you a brief on what is transfer pricing as a whole and what is the arm's length principle. So OECD, which is the ultimate governing body right now globally for transfer pricing as well, has already defined that any particular price at which an enterprise transfers the physical goods or intangible property or provides services to associated enterprise is called as the transfer pricing. In a summarized manner or in a layman terms, if I would like to explain the word transfer pricing, is meaning that any particular transactions that has been undertaken with the related entities, maybe amongst the multinational enterprises, maybe among the groups. So all those transactions at whatever price they have been undertaken is called as the transfer pricing. In fact, one of the recent studies that has come across that has mentioned that in today's globalization era, around two-thirds of the whole transactions are entered between two related entities, between the multinational enterprises. So we can imagine the amount of transactions or the quantum of the transactions that is at stake right now, and that we have to study in detail whether the prices at which the transactions has been undertaken, whether that is undertaken in line with the arm's length principle or no. Now that brings the second question, that what is the arm's length principle that needs to be adopted for transfer pricing. So arm's length principle means any prices that is charged for the control transactions between the related party, that is the transfer pricing, that needs to be computed having regard to the arm's length principle, which in a layman terms means the fair market valuation of a particular transactions. So why it is important to understand this particular topic and what is the importance of this transfer pricings, that we will study in the coming slide. So these are a couple of the public domain article of the Financial Express that has been published a couple of decades back, wherein, as I mentioned, presently after the globalization era, most of the transactions has been undertaken between two related parties amongst the multinational enterprises. And couple of decades back, many of the multinational or large multinational MNCs have been alleged, like Apple, Starbucks, Fiat, many other as well, that they have been alleged that they are not paying particularly the fair share of taxes in the countries in which they operate. So this concept of transfer pricing has gained enormous importance in this last 2 to 3 decades across the world, and even in the Africa and Middle East market in the last 15 years, 20 years. This topic has gained a significant importance. So because of this allegations, because of these issues, most of the companies have started preparing a documentation for transfer pricings to justify that they are undertaking the transactions at the right value. They are not evading taxes. Their objective of undertaking a transaction is pure commercial and not because of the tax evasion. And that is why the topic has gained a significant importance over the years. Just to give you a summary of OECD BEPS action plan, and what is the relevance for transfer pricing here. So as I mentioned, OECD is one of the authority, that is Organization of Economic Cooperation and Development, that is governing the transfer pricing topic in addition to certain other topics as well. And after realizing the importance of the global tax evasion, OECD also felt a need to introduce certain action plans, that is called the base erosion and profit shifting action plans, to have the transparency at the time of any particular tax transactions, to have a fair regime at a global level, so that there is no tax evasions or only a minimal tax evasions at a global level. Considering this objective, OECD in 2015 published 14 action plans, and most of the action plans relates to either the tax transparency, either relates to the transfer pricings, either relating to the challenges of digital economy for the taxation purpose. So the ultimate objective of all the action plans relate to the tax transparency that needs to be achieved at a global level, and there should be no base erosion and profit shifting. If you just see in this particular slide as well, out of 14 action plans, the action plan 13 relates to the country by country reporting, and at the same time action plan 8 to 10 that relates to the action plan for the intangible aspect. So all these action plans ultimately relates to the transfer pricing topic as such, and we have to therefore see how these particular action plans help in terms of tax transparency, and at the same time this is the action plans because of which many of the countries have also introduced the regulations in their domestic regulations. At the end, you must have heard recently that 137 countries have also agreed for OECD's base erosions and profit shifting pillar 1 and pillar 2 plan, which which requires to adopt a minimum corporate tax of 15% globally. And at the moment, many of the African countries, many of the Middle East countries, amongst the 137 countries, have also accepted this proposition to implement a minimum corporate tax uh, in their own country with effect from 2023. So with that, if they are required to implement the minimum corporate tax, the importance of transfer pricing will eventually increase. And we'll discuss that how the corporate tax will ultimately be important factor in terms of implementing the transfer pricing provisions in the coming slide. Yes, this is the example that I was trying to discuss when I mentioned that how corporate tax is going to be important, or it is important factor for implementing the transfer pricing provisions. So I have taken a very simple example here for the understanding of how corporate tax would be important for implementation of transfer pricing. So let us understand the situation 1 and situation 2 here. The situation 1, there are two entities, entity A and entity B. At the moment, let us assume that both the entities are related parties of each other and a part of the overall multinational group. Let us understand that first entity is transferring the goods to UAE entity, let's say at 910. Considering that the first entity is going to incur certain costs in its own country and thereby achieving a profit of, let's say, $10. At the second side, the UAE entity, which is going to purchase the product or the goods from the first entity, let's say at $910, is going to resell these particular products to third party entities in its local market, in its neighbor countries, let's say at 1350. Considering that the UAE entity has possibly earned a profit of $140 in its own country. Now applying a corporate tax rate of, let's say, 10% in the first country and 30% in the first country and the 9% in the second country. The multinational group have to pay the tax of, let's say, $3 in the first country and $12.60 in the second country, that is in UAE. Considering that the overall profit would be $150 in the situation 1, and they have to pay the consolidated tax of, let's say, $15.60 in the situation 1. In the situation 2, everything remains the same. We just have modified the price of related party transaction here, which was 910 in the first situation and which is $1,000 in the second situation. Considering that in the first scenario, the first entity is going to earn a significant profit of, let's say, $100, considering the increase in the selling price to its related entity. In On the opposite side, the UAE entity, which has purchased the goods at $1,000 from its related entity, is going to sell at 1,350, similar to situation 1, and thereby going to make a profit of only $50 as against $140 in the first situation. So you can see that considering the similar situation and considering applying the similar corporate tax rate, in the second situation, the corporate tax rate have increased to $34.50 on a consolidated basis, while the consolidated profit remains same for the multinational group. At the same time, for a country, so for example, for a UAE, uh, country as a whole is going to lose enormous amount of tax in situation 2. So in the situation 1, the UAE government is going to get $12.60. However, in the situation 2, it is only going to get the tax of $4.5. And this is only because of the change in the related party pricing here. So that is why it is important to understand that just by changing the price or modifying the price of the related party transactions, multinational enterprises are going to change the consolidated tax at a global level. But at the same time, many of the governments are going to get a different taxes. It can be either at a lower side or it can be at a higher side as well. And that's where the corporate taxes are quite important while implementing the transfer pricing provisions. And therefore, all the countries nowadays are trying to implement the transfer pricing provisions in their own country so that the local government, the local country, do not tend to lose out its fair share of taxes. Just to give you a glance at a global level, that as on today, more than 100 countries have already implemented the transfer pricing regulations or have already introduced the transfer pricing documentation requirement in their own country. So that also showcases how the topic is important not only for the worldwide as a whole, but also for the Middle East and Africa as well, which is the developing market and which has started introducing the corporate tax and the transfer pricing provisions in their own country. Let us move forward with to understand the more insights on the transfer pricing specifically for Africa and Middle East region. Just to start with the Middle East region, we have summarized here, for let's say 9 to 10 countries of the Middle East, and whether they are the part of OECD base erosion and profit shifting project or no, and whether the country have implemented the concept of local file, master file, and CBC report in its own country. All these reports or local file and master file relates to the transfer pricing documentation, and at the end, certain countries have also introduced the related party disclosure form in addition to transfer pricing documentation. So if we can show this slide showcases from the Middle East perspective as well. Most of the Middle East country have already been a signatory to OECD base erosion and profit shifting project, and thereby they have already implemented the local file in its own country, the local file, master file, and country by country report. Like Saudi Arabia, recently the United Arab Emirates has also introduced just 10 to 15 days back the concept of corporate tax and transfer pricing in its own country. In addition to that, Qatar, Egypt, Jordan, Turkey all have implemented the transfer pricing requirement. At the same time, there are certain countries like Oman, Bahrain, which are a part of OECD's base erosion and profit shifting project. However, they have not yet formally introduced, the requirement for preparing the local file and the master file at this stage. However, even in those situations, the taxpayer who are operating in Oman and KSA or Oman in Bahrain, those countries are required, are recommended to prepare this documentation, because uh, we are expecting that similar regulations that may be introduced in their country as well. So this just gives a glimpse in a way from the Middle East perspective that how the region is active in terms of the OECD's involvement, in terms of commitment of their, to in terms of OECD's BAPS project and the transfer pricing regulations. Similarly, we have covered the slides for Africa here as well. My colleague Erastus will deep dive more in this particular slides of Africa. Erastus, over to you.
Thank you, Vora. That was excellent. And to our audience, thank you for tuning in. Africa, we also have a mix of positions when it comes to transfer pricing. And I would like to take you through quickly some of these positions with regard to Africa. We have broken this into three main parts, and that is East Africa, North Africa, and also Southern Africa. Sorry, four main parts, and then West Africa. I'll not go through all of them, but they are there on the slide. You can see them. And starting with East Africa, for example, you have Kenya, where the OECD principles and signing off on those arrangements. The answer is yes, but when you come to another country, very important, like Tanzania, it is no, they have not gotten there. And the concept of local file, master file, and CBC reports. When you come to related party transactions disclosure, you find that indirectly, it is already happening. For example, in Kenya, the requirement for consolidated reports, which if a company is based here, then it must also disclose those other companies and entities with which it is related. So the form, format, detail, and so on, of course, those are coming by, and that is why we are putting no there. But in the background, there's already legislation coming up in those in that area. So there's a closing of gap, by the way, between transfer pricing and minimum tax, just like my colleague mentioned earlier, and I will be mentioning something about that a few more slides from here. So we have countries in like Tanzania, we have Seychelles, we have Uganda, We have Ethiopia, North Africa. Some of the key countries, of course, are like Egypt, Morocco, Tunisia, Algeria, and the others. And we see that many of them have already signed off on the OECD principles, BEPS principle document, and are saying, yes, we will go by this. And when you come to local file and master file concepts and CBC reports, again, we have given you the analysis of those countries. South Africa, we find South Africa is already in and is, yes, everywhere. OECD, BEPS, they are in. Local file concept and master file, CBC reporting, and then third-party reporting for related parties. That one, they are in everywhere. Zambia is there also, a mix. Botswana, Angola, Mozambique, Malawi. West Africa, Nigeria is leading and having signed off on everything and adopted significantly everything there. Senegal, the same. Cote d'Ivoire, Ghana, and of course there are many other countries in Africa. And we see this developing into one thing, snowballing into one thing, that nations are looking at how to reduce revenue leakages at the end of the day, and also to be able to consolidate their own and, of course, protect boundaries so that as much revenue as possible remains in there. And I can maybe I transfer back to Vora, but before I do that, I said I will mention something about some of the connections that are developing between transfer pricing and minimum tax, and that we have captured a few countries there just as an example. For example, Kenya is not on that chart, but I will say something about Kenya in terms of comparative chart of tax, just tax and transfer pricing. So you find that in the area of minimum tax is clearly being used at the moment and will continue to be used perhaps a bit more by countries in terms of saying, if we cannot catch you on the transfer pricing side, at least we'll catch you on the minimum tax side, so that at least the country has revenue. In Kenya, for example, and I'm happy some of the people who enrolled for this are actually with our tax authorities and so on and so on. Minimum tax was introduced, but it was challenged in court, and there's an appeal going on, but it met a very strong legal concrete wall. Now, the idea then is it the end of minimum tax in Kenya? I don't think so, because the authorities would want to be able to catch tax one way or the other. And we look at a country like Tanzania, yes, they have it. And it has not been challenged in that country. Nigeria, they have minimum tax. They have just differently dealt with it in that the percentage is low, 0.25, but not just that. They are saying that if you perhaps made profit, but that profit is all non-taxable, as we know it can happen in accounting, then at least 0.25 of that will still be paid under minimum tax. Again, what Nigeria is trying to do is to, again, protect revenue and at least make sure that some of that is coming in. Egypt, on the other hand, they don't have minimum tax requirements. But when you come to the whole big tax country like South Africa, they have not quite brought it in. There was an attempt to bring it in, but because of the COVID-19 pandemic, it has been put on hold. Again, the connection between this and also COVID-19 pandemic that we will be talking about briefly a little later on. So that is what we seem to be seeing developing in the whole region, the continent of Africa, and of course in the Middle East, as my colleague, Mr. Vora, has just stated. And back to you, Mr. Vora, so that
Sure.
you can pick on the next slide.
Thank you, Erastus. It's a wonderful overview on the Africa side for tax and transfer pricing side. And as you rightly mentioned that most of the African countries and the Middle East countries have actively progressing on this particular front. They are actively discussing with the OECD as well. And that brings to our next slides. As a overall, what are the implications of transfer pricings for Africa and Middle East now? So if I summarize now, I mean, definitely we have not gone into detail for each and every country at the moment because many of the countries have a different thresholds on the applicability of transfer pricing. There are certain, variations in the regulations. But at the moment, giving the overall perspective, the whole Africa and Middle East region is considering to introduce the transfer pricing rules. Either they have already introduced or they are planning to do so. And at the same time, not only the introduction of the rule was important, but also the adherence to the rules. Most of the country have already started the detailed scrutiny, the detailed investigation to ensure the taxpayers in their own country are fulfilling the requirement of this particular transfer pricing topic. So therefore, the countries have already started introducing the three-tier transfer pricing documentation, that is the local file, master file, and country by country report. At the same time, as we discussed in the previous slides, there are increasing concerns of the tax authorities of a particular country that allocation of tax revenue to the local country is not fair. So that is something, quite a big challenge for the authorities to ensure that there is no revenue leakage, as Erastus also mentioned, and at the same time to ensure that all the intercompany transactions are taking place at the right value. And at the end, I would like to say that right now, many of the countries have started scrutinizing in detail the transfer pricing documentation, the agreements, and the detailed aspect of the intercompany arrangement. And many of the taxpayers, as on today, are struggling to submit the transfer pricing documentation, the benchmarking search analysis, the comparability analysis, what we say, which we generally do on the licensed database to extract certain third-party comparable data to verify what is the profit, what is the price in that particular industry or a business. So many of the taxpayers are really struggling to submit this documentation and analysis. And at the same time, their risk for tax addition and the penalties have started increasing significantly because the authorities would like to increase their tax revenue for the country. They are adopting a very strict approach, very rigid approach in terms of levying a penalty, in terms of making an addition to the taxes. And therefore, it is always advisable for a taxpayer to prepare those documentation in detail for each and every country where it has a presence. One of the studies also says that Africa and Middle East also loses close to 100 to 150 billion annually. So you can imagine the amount of amount of taxes that is at stake, and none of the countries are going to adopt a very lenient approach because ultimately their whole intention is to increase their tax revenue in a right manner while verifying the intra-group transactions, verifying the documentation, etc. And therefore, for taxpayer, it is important to understand the topic as well as to prepare the comparability analysis and the documentation. While we discussed the transfer pricing documentation, it is important to prepare. It is important to have this analysis in place. Let us just briefly touch upon what are the different transfer pricing topic documentation that is required to be prepared. So there are three major documentation, I would say. The first one is the country by country report, the another one is the master file documentation, and the third one is the local file documentation. The first document, that is the country by country report, is a document which is generally be required to be prepared by the large MNCs, especially having the consolidated turnover of, let's say, 750 million euro and above. Almost similar threshold has been prescribed by most of the countries, since this particular threshold has been prescribed by the OECD. So that means most of the large MNCs are required to prepare the country by country report, wherein they have to give the jurisdiction wise information of revenue, information of profit, information of number of employees, intangible assets, etc. So this is a kind of a statistical document which gives the glimpse of the overall summary of the multinational groups tax requirement, the revenue requirement, the employees requirement, and therefore it would be easier to understand from the tax authority perspective where the profit is situated and where the value addition or where the employees are based out. So they can easily identify from the country by country report the risk of a particular multinational group and whether they are paying the fair share of taxes in each country or no. Moving to the second document, that is the master file documentation. And again, it's a group level document similar to country by country report. It's not a entity specific or a country specific, but a blueprint of the whole multinational group for the transfer pricing policies that they are adopting for the intragroup transactions. Unlike country by country report, which is the statistical information showing the report, the master file is more of a theoretical documentation which requires to submit the detailed analysis of which are the intragroup transactions for a group as a whole, what are the value addition factor for the businesses, what are the intangible policies, what are the intragroup financing arrangement at the moment, what are the business restructuring related arrangement within the group. So all the group related aspects are covered under the master file to understand the transfer pricing policies adopted by the group. And the third and the last document is the local file documentation, which is a entity specific documentation, I would say, not the group documentation, not the country specific documentation. So for example, if the multinational group have a presence in, let's say, Kenya, and it has 3 entities in Kenya, so all 3 entities in Kenya have to prepare a separate local file documentation with respect to related party transactions undertaken by them with the related parties. So unlike country by country report and the master file, local file is just a entity specific documentation that needs to be submitted with the local tax authorities to justify what are the related party transactions and how the transactions are in line with the market conditions. So this is the document which provides a summary of the comparability analysis, the benchmarking search, the intragroup agreement related information as a part of the documentation as a whole. And as we discussed, presently more than 100 plus countries have adopted some or other documentation requirement. In fact, many of the countries have already adopted all 3 forms of the transfer pricing documentation. And in addition to that, few countries also require to submit the related party disclosure form alongside the tax return which they file annually. Let us move forward with certain practical case studies, certain recent judgments for the transfer pricings and the practical challenges. So we have created a couple of practical case studies here. Just to give you the first case study, the inbound scenario. So that means the entity is relating to Africa. That means Tanzania entity is a subsidiary entity. The parent is situated outside Africa and Middle East at the moment, which is USA in this case. USA parent entity has supplied certain raw materials to the Tanzania entity. At the same time, Tanzania entity, which is a subsidiary entity, have paid the royalty fees, have paid the management fees to the parent entity for utilizing certain services, for utilizing certain know-how, etc. And the most important factor is here that Tanzania entity is incurring losses in its books of account, and therefore the Tanzania entity at the end is selling the finished goods to the third party customers. Now, what are the issues for transfer pricing in this particular case study? So the first and foremost issue would be that it is the Tanzania entity is incurring losses, which is a quite a eye-catching factor for tax authorities here. And at the same time, even if in spite of incurring the losses, it is paying the royalty fees and the management fees to its parent entity. So tax authorities will definitely go deep dive into the operations to check whether have the Tanzania entity actually utilized any services while paying the royalty or management fees, how to demonstrate the profit of Tanzania entity which is in line with the third party conditions or no. Because after purchasing raw materials, after paying royalty and management fees, which the Tanzania entity is incurring losses, whether that profit is in line with the market conditions or no. Again, that is the important questions. And the most important part would be to justify the receipt of management services, the receipt of technical know-how services, which is also a quite a complex issues at the moment, not only in the Africa but at the global level. So all these are a typical issues that are faced in generally the inbound scenario, that is where the subsidiary is present in Africa or a Middle East and the headquarters is situated outside. Something similarly, the another case study revolves around the outbound scenario. That means the parent entity is either in this Africa or a Middle East, which is the topic for today, and the subsidiary entities are situated outside the Middle East and Africa zone. So in these case studies we have created is where the South Africa entity is the parent entity, which is selling the goods to its UAE subsidiary entity, which is a distributor entity. At the same time, South Africa entity being a headquarter have provided interest-free loan to its UAE entity, have also provided certain free of cost services like HR services, IT services, admin services, etc. to its subsidiary entity in UAE. And at the end, the UAE entity, which is just a distributor entity, is reselling those goods to the third parties either in UAE or in the neighboring countries as a whole. Now, what is the complex situation for transfer pricing here is that being a headquartered entity, it has supplied so many free of cost services to the subsidiary entity, which is interest-free loan has been supplied, free of cost services like IT, HR or admin services have been supplied. So it is quite a challenge to justify before the tax authorities, because the concept of transfer pricing itself says that whatever transactions you are undertaking, you should take the remuneration, you should charge certain consideration as if the transaction is entered with the third party entities. So in this kind of scenarios, the South Africa tax authorities would definitely try to challenge the fact pattern of the taxpayer which is in South Africa as to why they have not charged any interest for the loan, any consideration for the free services, etc. So all these are quite typical scenarios in the case of outbound cases, and many of the taxpayers are facing the issues at the moment relating to these issues. Certain, while we discussed the practical case studies here, let us just summarize few important judgments from these are the actual judgments in the Africa region right now. Definitely we have not covered any judgment from Middle East because the transfer pricing topic is still evolving in the Middle East region as a whole. But in terms of Africa, you can see in this particular slide that most of the countries like Ghana, Kenya, South Africa, Nigeria, everyone like the High Court, the Supreme Court have provided the detailed ruling in terms of the complex transfer pricing issues. And all these issues revolves around either the selection of the methodology, the royalty and the license payments, the OECD transfer pricing principles. All these are quite a complex scenarios, and most of the cases have gone against the taxpayer in terms of the penalties, in terms of the tax additions, etc. And therefore, each and every case law, each and every judgment in a way demonstrates that there is a high priority to prepare transfer pricing documentation, to prepare the comparability analysis, or else the tax authorities are going to challenge your case, are going to challenge the fact pattern, and it can go up to the High Court or a Supreme Court level, etc. So this is just a summary right now. We are not going in detail for each and every cases. All the cases are available in the public domain at the moment, but considering the shortage of time right now, we are not discussing each and every case in detail. And at the end, I would like to summarize certain practical challenges for transfer pricing here, which we also discussed in the case studies, in the case judgments, etc. So these are the typical challenges, practical challenges which taxpayers are facing and which tax authorities are emphasizing more and more while scrutinizing the cases. So certain challenges are when the taxpayer doesn't have any intra-group agreement itself while entering into the transactions with the related party. They are loss-making entities, which we discussed in the first case study. It is very eye-catching whenever there is a related party transactions, but the taxpayer is the loss-making entity. At the same time, whenever there is the absence of benchmarking search or a comparability analysis in the transfer pricing documentation, that means that taxpayer is not in a position to substantiate the related party transactions. At the same time, certain intra-group royalty and the management fees, intra-group financial transactions are always the priority, for the tax authorities while investigating the case of the taxpayer. And in addition to that, the permanent establishment issues, the exchange of information between two countries nowadays. Again, that is a quite a complex thing at the moment, which is going on at the back doors. All the countries which we discussed right now, 137 plus countries, have most of them the agreement to exchange the information with each other, so that they can stop the revenue leakage, they can stop the tax evasions. So that is something important part, that all the tax authorities also have the data for the taxpayers as to which company is paying the share appropriately or the which taxpayers are just trying to evade the taxes. So these are the typical practical challenges which the taxpayers are facing right now, and one needs to mindful while dealing with these complex issues, while preparing the documentation. Again and again, I am re-emphasizing on this particular fact pattern, because this is something that tax authorities are going to challenge in future, because to meet their target of taxes, to increase the tax revenue of the government, etc. And therefore, we as a taxpayer have to be mindful while presenting the case, while presenting the documentation before the tax authorities. The next topics is belong to the impact of COVID-19 on transfer pricing, which Erastus will go in detail, because quite an important topic in today's era, which we are facing at the moment. So Erastus, over to you.
Thank you once again. And it's amazing that the impact of COVID-19 on transfer pricing is a reality. And the OECD have prepared a document on that, but also several countries have prepared documents and guidance and ways of looking at issues in various countries. And the impact of transfer or of COVID-19 on transfer pricing will not and cannot be measured fully at the present moment, because we are still there with the pandemic. We are not out of it yet. But the amazing thing is that despite what I'm going to talk about, and again, very briefly, many other nations, and I think in every nation, there are industries that have made lots and lots of money, despite the fact that others were being negatively affected by the pandemic. And of course, we know those in research, those in communication, some of them have done extremely well and continue to do extremely well in terms of income. But there was and continues to be a serious disruption in the supply chain system. and the management of that. Supplies from various destinations were disrupted. Movement of people and goods, of course, disrupted. And of course, that also meant that certain industries would suffer because there would be no raw materials or finished goods for that matter because of COVID. Human resource issues, travel restrictions, people were laid off, some were put on half salary, some or no salary at all. And out of that also, I am aware that even now, there are certain industrial court cases challenging some of those things. But we look at that and we look at relocation. Some people were held up in other countries where they're not supposed to be working, and some were, of course, delayed in re-entering territories where they are working. And transfer pricing policies in many instances was simply overthrown because of the various other things that you had to consider. When you talk about arm's length transaction comparability, now you are comparing something with something totally different because of the pandemic, and of course the extraordinary costs and losses that many industries incurred as a result of this. Liquidity was affected, and very, very heavily in some industries, and most industries really. Those who benefited from and have benefited from COVID-19 are there, as I mentioned in the beginning, but they are not many. Working capital deficiencies and application for write-offs, and there were all these applications, and even in Kenya, for example, there was an urge by the government for banks to postpone the payment of loans, reconsider reconstructing loans, and things like that. Those have impact. Legal concerns, of course, are also there and have been there and still are there, by the way, because we are not out of this thing yet. We don't know whether a new wave will come up. The impact on profit and losses then become obvious, that returns may not be as was expected, even though some industries, as I mentioned, did pretty well, including banks in Kenya. They did extremely well, and of course, that is an issue on the side there. So that is what I would have wished to mention very quickly about the COVID-19 impact. The framework that was given for, on the next slide, we have the framework which was given, issued by the OECD, and focuses on three main areas, by the way. One, and also as Crowe International, Crowe Global, we have also issued guidelines which our firms globally are using and referring to. But looking at the OECD angle, we have the response and recovery, the pandemic preparedness, and the idea there is to say that in the future, it should be possible for the world to be able to see to some extent that it is possible that some kind of a pandemic will break out, and therefore have some level of preparedness. And all that can, in fact, be summarized under crisis management so that we know how to respond to things. When we talk of force majeure, yes, it is there. And of course, this one on the previous slide. But what then do we do as a global family and a global community when this kind of things strike us? We are the same from the north to the south, from east to west, and when one side is affected, it hits all of us. And again, I emphasize the need for updated, upgraded crisis management arrangements in all entities. And of course, Crowe Global is leading in that area also, and giving out information and support where needed. And back to you, Mr. Bora.
Thank you, Erastus, and quite an important topic. You rightly said we are quite at a stage, the situation is quite uncertain at the moment. We are still not out of the pandemic at the moment. And because of this uncertainty, it has heavily impacted the intragroup policy of a particular group, intragroup transfer pricing arrangement, I would say, as similar to third party activities. This kind of transactions have also been impacted quite widely, and there is always a requirement to revisit the business model, because the business model which was workable maybe 5 years back may not be operational at this moment, because the pandemic has taught us that many of the we have to be prepared for uncertainty, and that's where it is important to relook the transfer pricing policy at the moment. Just to give you one more case study here for the COVID impact, we have created a case study wherein there is a manufacturer, which is a parent entity, which has sold the goods to its subsidiary entity, which is a limited risk distributor entity, and the LRD model followed by, that is the limited risk distributor model followed by the subsidiary, at the end is to just resell the finishing goods to the end customer and retain a minimal markup for bearing the limited risk. In terms of the impact of COVID, if we just discussed what Erastus mentioned, there are lot many disruption in terms of the import and export of goods or the transportation. At the same time, the relocation or the movement of employees or a labor that has been stopped or that has been disrupted. So for the manufacturer entity, it's been possibly a difficult moment to manufacture the goods, to supply the goods to the limited risk distributor entity. There could be certain non-operational or extraordinary cost or the working capital issues, because kind of the situations are there. There could be certain extraordinary cost, like it could be legal cost, it could be health cost, I would say the sanitization cost. So it can be anything. So all those factors have ultimately resulted possibly in the profit or the losses of all the entities, which are the manufacturer and distributor entity in this case. And this COVID has impacted in this kind of scenario. So let us understand now why there is a need to revalidate the transfer pricing policies. We already discussed the factors, and now let us understand, as we discussed these issues, it could have a significant impact on the profit or loss of the industry, on the business. There are certain industries which has largely impacted, like tourism industries, aviation industries, but at the same time certain industries like Erastus mentioned have done quite a well in this period as well, like pharma industries, certain banking industries, certain the industries of software development, which has adopted to make it work from home scenario, or to provide the solutions online. So those kind of situations, those kind of industries have done well, but it has definitely has resulted quite a significant mark of profit or losses. So because of this COVID impact, it is important to reassess whether this profit or loss is the right uh, scenario, or there is a need to revisit that in terms of the market analysis. At the same time, as we discussed, there could be certain extraordinary losses as well for the manufacturer entity, and it's important to understand commercially that which entity is going to absorb these losses, which entity is going to take the onus and the responsibility for these losses. While the limited risk distributor generally bears only the limited risk and generally is entitled for the limited return, but can we say that in this kind of extraordinary situation of pandemic, the manufacturer will also pass certain amount of losses to the distributor as well? Can that be agreed? First of all, can the intragroup agreement between the manufacturer and distributor can provide this kind of the adjustment for the losses? Like Erastus also mentioned the clause for the force majeure. We always mention these particular clauses in the intragroup agreement, but we never tend to utilize this clause. But in this kind of uncertain, era, possibly we can explore as to how the force majeure clause can be implemented in this kind of scenario, to say that the agreement may not be valid for the throughout the period, or may be valid only for a certain part of the period. At the same time, how to restructure or recharacterize the particular arrangement, because in terms of COVID pandemic, it's not necessary that the situation will continue to do well in the future as well. We have to be prepared for the similar situation in the future as well, and how to restructure the arrangement so that we are well prepared in terms of the transfer pricing risk that we are talking about. And at the same time, to make a modification in the intra-group agreement is quite an important factor, because ultimately that is the legal document which preliminarily mentions the risk and reward uh, of both the parties, which mentions which is the responsibility of both the parties, how to react in this uncertainty, and which entities is liable for the overall losses. So that is where it is important that it is important to revisit the transfer pricing model. It is important to reassess whether the transfer pricing policies of previously adopted is applicable rightly or no in this era. And at the end, I would just like to say how Crowe can support. As Kamel also mentioned at the start of the sessions, that we as Crowe team are prepared for the transfer pricing not only in Africa and Middle East, but the whole part of the world. So we have the team of the transfer pricing experts in the different parts of the world who can help you to prepare the preliminary assessment or a health check, whether everything is in place rightly or there needs to be certain modification which is required. In terms of preparation of the intra-group agreement, we are also well versed with the technicalities, the legalities, and we can help you to prepare this intra-group agreement as well. The transfer pricing documentation, as we discussed in the previous slides, the three important documentation and the related party disclosure form, which is important to provide the information to the tax authorities. So we have the capabilities to prepare those documentation in appropriate manner, in a justifiable manner before the tax authorities. And it is important because ultimately this is the first document that's going to the tax authorities. The later explanation, that will proceed further, but it's important to submit all the documentation in the right format, in the right manner, and in the right explanation side. And at the same time, as we discussed, the comparability analysis, the benchmarking search analysis, what we say is important to perform on the databases, the licensed databases, which we have the licenses. So these are the kind of services that we as a Crowe can provide not only for one particular country in your multinational group, but all the companies which are present in the different locations of the world, to to make it in the consistent manner, to make it in alignment. And at the end, I would like to just highlight here the Crowe value proposition. So we have, as I mentioned, the specialized team who has the experience on the global transfer pricing. We have the practical experience, which is most important, technical aspect, while performing any aspect in terms of formulating the transfer pricing policies, in terms of handling the litigation part with the authorities, the database access, which we discussed, the licensed databases, which we have the subscription. It's important to perform the benchmarking search on these databases to extract the third-party market informations. And just to add here, that tax authorities are also using the similar databases which we have the access, and so that we can say that we have the edge in terms of preparing the same documentation or the benchmarking analysis from the database which authorities are also using. And the overall, the global exposure which we have as a Crowe, that will bring the necessity of the knowledge or necessity of the technology, and all together we as a Crowe are ready to support you. So with this, I would like to hand over to my colleague Mark Watson from South Africa to provide the closing remarks. Mark, over to you.
Thanks, Rashad. Good afternoon to all the delegates. I see we have about 185 delegates on listening to the seminar, which is fantastic. Good afternoon to you, to Rashab and Erastus. Thank you very much for putting together this very informative presentation. Just a few points that I picked up out of here. Firstly, a very complicated situation of taxes that we all need to be very aware of. Points that have been raised, there's a very big risk of transactions being challenged by the authorities if they are not correctly handled and not put in place correctly. Worldwide, with all taxes, not just transfer pricing, tax authorities are starting to talk to each other. So we need to be aware of it. It's not, there's no secrets anymore between countries. Being a complicated issue, and in order to put together the correct policies and agreements, etc., benchmarking studies are required. There's a lot of information that the Crowe Global can support you with in terms of doing the benchmarking studies to make sure that your pricing and your transactions are correctly completed. Reporting and record keeping was a point made. Vitally important that anybody who's doing global transactions that may be subject to transfer pricing, that you keep your records and that you comply with all the necessary reporting requirements. So with that, I think a very well presented and put together presentation, and I would encourage all our colleagues within the Crowe Global Network, as well as all our clients and attendees on this call, to reach out to your local partner of Crowe Global to assist you with the transfer pricing policies and implementation. If you haven't already done something like that within your own company, reach out to our network. Our network has a vast number of specialists in this field. Let them assist you to make sure that you don't end up in a scenario where that could be costly in terms of taxes, or irritating in terms of having to deal with revenue authorities and fight your way out of a complicated scenario. So at the end of the day, just a very word of thanks to Sharp, to Erastus, of course to our Middle East and African Regional Director Kamal for his opening remarks. And as I said a few seconds ago, reach out to the Crowe Global specialists in your region for assistance, and we wish you lots of luck navigating your way through this very complicated issue of transfer pricing. Thank you.
Yes. Thank you, everyone.
That brings us to the end of the presentation. Thank you.
Thank you. Thank you to everybody else. God bless. And if anybody